Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 3rd of December, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of December. And let's begin with spot gold, where we just take a quick look. It has rallied up over the last couple of days, while the dollar against Japanese yen has fallen, taken a tumble. So it likely shows that the US dollar index is probably down as well, which we'll take a look later on. Okay, let's begin with spot gold here. And on Wednesday, it broke out higher above the daily 200 EMA, which has been limiting its progress for over the past week and a half, and then followed by a strong bullish move on the Thursday due to the slightly lower than expected PCE price index, which indicates inflation has been slowing down slightly. So that is traders and analysts take it as a possible indicator for the Fed that they may slow down their rate of increase from 75 basis points down to 50 basis points, which will be coming up in the December 15 meeting. So that's what they're hoping for, and that has boosted the other currencies, including spot gold, to rally up higher against at the expense of the US dollar. Then on Friday, it did dip back down lower due to better than expected, in fact, quite strong jobs report from the non-farm payroll report. Even though it did pull back lower, but it managed to climb back up by the end of the day. And overall, closing around the 162 FIB extension of this reversal swing move, where it bounced off from the previous week and managed to rally up into the 162 FIB extension. So this interim intermediate resistance that's already has been broken and now should be support. As is this swing high area now will be a key support. And let's remove this one here. This resistance up here is, let's remove that for now and likely project that up to the next resistance zone. That's going to be at the 200 FIB extension along with the 1850 round figure. And also this 162 FIB is in confluence with the 1800 round figure. So that was a clear target for precious metal here. This coming week, there's some minor news with the ISM services and PPIs at the end of the week. And if we take a quick look at a weekly time frame, that has managed to cross over, close above the weekly 55 EMA. And looks like there could be a bullish continuation move, and likely that's going to try to target the next resistance zone. Okay. And let's also project this swing low here. So that was limiting the initial move higher from the 138 fib. Pull back to retest the 100 fib swing high before climbing back up into the 162 fib. And let's see, we extend this previous trend line further out. Let's see if it's does come into play for as a resistance. Now there could be some intermediate resistance up here, but we'll see how it goes next week. Whether there could be a reaction and a pullback lower. So this could either pull back to test this swing high previously, and before climbing up to test this trend line, and if it's able to break that, target the 1840 area, 1840 to 1850. Or if it's going to test that trend line first, pull back to bounce off the 162, and then also target 200 fib after that. So we'll see how the price action is for next week, and especially in inverse correlation with the US dollar index. Okay. So for now, we'll leave this fib as it is. It's still relevant. Okay, let's move on to take a look at the US dollar index. And here's the US dollar index, the DXY. Let's see, there was a significant gap down on Thursday, at the start of Thursday. And a continuation move low on a Friday after a pullback with the non-farm payroll data, because better than expected. So there was an attempt to recover, but then after that, it still managed to press down. But from the previous day on the Wednesday afternoon US time, this weakness here and rejection was due to Fed Chairman Powell's comments during his speech in the afternoon, where he did mention that if the data shows that inflation is slowing down, then it's possible that the December 15 meeting, they could start to slow down the rate of rate hike from, he didn't mention the numbers, but traders and analysts are pricing in a potential 50 basis points rather than a 75 basis points. So that weakened the US dollar. And that was the turnaround here on a Wednesday afternoon, and close lower for the day, and then gap down lower at the start of Thursday. So we look at the weekly time frame. It's also coming close to the weekly 55 EMA here at 103.78. So there could be some downward pressure, some bearish sentiment to push it down towards the 103 round figure. So I would move this support zone into the 103 area. and this swing low area to be at the 105 round figure to be a resistance now. And let's move this out. And that was the intermediate support at the daily 200 EMA, which kept down below that. So this is also a key resistance now. So this could be intermediate resistance. All right, so it has started to dip below this swing low, which is the 0 fib here. So it is possible that we could also turn this around and flip this over now to this swing high and to this swing low. And with this bearish reversal move, and we can see there's a confluence here with the 162 fib extension right at the 103 round figure. So that we could update that now. And also previously from some time back, let's go to the weekly and luckily the monthly now. And we can see there was this double top resistance, which was broken. And now it's coming back to test that level. It's at 103.75. Okay. So that was that last test, and which was tested again before finally broken through. Now it's coming back to test that level, and it's also aligning with the weekly 55 EMA here. So yes, that was the 103.75. Okay, so let's see how it goes for next week. And for now, there's bearish sentiment for the US dollar, and likely will continue until the Fed meeting, the FOMC, on the 15th of December. And we'll see whether they will increase rate by 75 basis points or 50 basis points. And let's also change this to this area here at the daily 200. Okay, so let's move back to the other major pairs. Let's move on to the dollar against the Japanese yen. And following the DXY, which has weakened, it's also similar with the dollar against Japanese yen. So the Japanese yen has recovered against the US dollar. And I think that's with the hope for the Bank of Japan as well, that it doesn't need to intervene further. So all the support has now been taken out with the significant fall on Thursday with the PCE price index, the indicator that the Fed is looking at for inflation. And it has broken through the daily 200 EMA at the 135 and tested the 21 fib retracement here. So this is now going to be a significant support. And further up here, this 50 fib here area now will be resistance, and more significant resistance up here at the 140 together with the 62 fib retracement. So let's see if it's going to weaken further after retesting the 135, break through the support, and whether it's going to fall all the way down to retest this swing low at 130.39, just above the 130 round figure. And for now, it seems unlikely that it's able to recover. So unless there's any change in the fundamentals or any major economic news. Let's take a look on the weekly time frame, and you can see that's the breakdown of very bearish candle last week. And the weekly 55 EMA is sitting just above that swing low at the 131.34. So that could be a support zone. Back to the daily here. So around this level as the weekly 55 EMA. And I think I'll move this all the way back down to the 130. That's the major support now. So this was the break of the support after Fed Chair Powell's speech late on Wednesday. Closed below that, and then on Thursday fell further lower, along with the data from the PCE price index. And on Friday, with better than expected jobs report, it did attempt, this is the 4-hour time frame, and it did attempt to recover, but it just tested the 38 fib and then resume a bearish stance again to close the week. So there is some possibility of pullback, and whether it's going to pull back higher before testing the next support zones. All right, so the dollar yen and the sterling were the major moves for last week, with the at the expense of the US dollar. All right, so let's have a good trading week in the next couple of weeks before the FOMC, which will be a very volatile week, with not just the Federal Reserve, but also the ECB and Bank of England as well, having their rate meetings. Okay, so, and just right before the holidays. So do have a safe week and a good trading week, and cheers for now.